All right. Hello, everyone. Welcome in. See, people are still trying to connect. We're a little bit early, so we're going to get started at around 12:01 while people are still connecting to the presentation. We have a great presentation for you today. I hope you guys are just as excited as I am. So again, just another 2 or 3 minutes before we kick things off. So I appreciate everybody's patience. Um, and it shouldn't be much longer. Seeing more people connect. Again, hope everybody's having a great start to their day. It's about to get better, I'm sure. A lot of good information coming your way soon. All right, more people seem to be connecting. About another minute or two. Again, I appreciate all of your patience. It's 12 now, just another minute. See people still trying to load in, so I want to give them an opportunity to connect before things start off. All right, I think that should be enough time. We'll go ahead and get things started. All right. Hello, everyone. My name is William Mucker. I'm a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Create Your Personalized Income Strategy to Achieve Higher Yields on a Consistent and Predictable Level with Sean Muniu of Bequest Asset Management. As a quick note, please be aware that we'll be answering questions, so feel free to use the chat and/or Q&A function on your screen to pose your questions whenever they cross your mind. Before we do get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time when you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information if you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction. Please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Sean.
Will, thank you. Appreciate that. It sounds like you got all your attorneys satisfied there with that disclaimer. But thank you, everybody. Share my screen here and we will get started. Great. Will, can you see my screen?
I can see it. Looks good.
All right. Thank you. Thank you, everybody, for joining us this afternoon, wherever you are, morning, afternoon, evening. I appreciate you spending just a few minutes with us here. We're about to talk about some really great information. My name is Sean Muniu. I'm one of the founding partners here at Bequest. I co-founded Bequest about 5 years ago, but before that, I spent about 15 years in corporate America running technology investment strategies for some of the largest Fortune 100 companies. Becoming an entrepreneur was always a dream of mine since I was a kid, and it finally became a reality when we started Bequest with my business partner, Martin Sines, just over 5 years ago. I'd always had the mindset of a professional investor, and now I get to live that out every day. Today, we're going to talk a little bit about something that you may not hear very often as an investor, as somebody who's managing a portfolio. You know, the word alpha is always on everybody's mind. How do I generate alpha? But we want you to focus a little bit on income over the next 30 minutes. And so we're going to get you to talk a little, we're going to talk to you a little bit about the income strategy that you have with your portfolio and how to generate a consistent, predictable strategy inside that portfolio that you're managing. Feel free to drop some questions in the chat as we go. We're going to spend a few minutes at the very end to kind of help answer some questions that you might have about Bequest and our investment strategy. And so use that question and answer button at the bottom of the Zoom there and just drop in some questions, and we'll kind of handle all those at the end. Before we get started, I want to run through a quick exercise with you that I think is very important. And so if you have a pen and a pencil or a paper nearby, I'd ask you to go grab that and come back here and just spend a few minutes with me answering this very important question so that I can get you in the mindset of what we are all about here at Bequest. And so we have this simple question here we would just love for you to answer for us on your own. And the question is, if only I had a portfolio that generated blank on a consistent basis, then I would have blank. I want everybody to ask themselves this question. And this is the question I want to help answer over the next 30 minutes here with you. If only I had a portfolio that generated $100,000 annually, $200,000 annually. On a consistent basis, then I would have financial freedom. I would have more to give to my family, more to give to my church. Like whatever it is, like what I'm trying to get at here is, what is the why? What is the why that is behind why you're managing this portfolio of assets? Why are you doing it? You're doing it for a reason, right? There's a goal that you're trying to get to. And if what we do here at Bequest matches up with your goal, we know that you'll take some action with us. We're about to talk about some investment strategies and some products that we have at Bequest. But if these products, if you don't see them as a way to get to your goal, what you're trying to get to, then it's really not going to land well. And so again, we're going to get to this at the very end, but answer this question for us, and we'll get back to it at the end. So the problem with fixed income, the problem with when you're building income in your portfolio, is you want that stream to be safe, steady, and passive, right? It might seem like very simple words, but if you're on the hunt for income, safe, steady, passive do not seem to be easy to obtain. It might be one, but not the other. And so when you're focused on income, the problem is you want it safe, you want it steady, and you want it passive. And with the options that are out there in the marketplace, whether it's a dividend stock strategy or an ETF strategy, whatever it is, there seems to be a lot of economic uncertainty out there in the marketplace that really creates a problem when you're building a portfolio. And this is a measure of the world uncertainty index. It's kind of like the VIX, but really, what's going on around the world. And this is a picture of what's been going on since the 90s. Volatility has been increasing. It's been going up and to the right now for well over 35 years, and there's a lot that's been going on. in the marketplace. I'm reminded of what one of the greatest investors of all time said, Warren Buffett. He said that uncertainty is the friend of the buyer of long-term values. Uncertainty is the friend of the buyer of long-term values. What Warren Buffett was saying was, during uncertainty, if you are investing in your principles, your long-term principles, the strategies for the long term, then don't worry about the uncertainty right now. And in fact, he says, remain calm and focus on your long-term values. And so a lot of people are running for the hills right now. They're not making investment moves, but that would be counterintuitive to what one of the best investors of all time would do during times like this. You know, the question is, will volatility continue into 2025? And I think to make that argument is really easy. If I was sitting in front of you last year or the year before that, and I was talking about uncertainty in the marketplace, it might be more difficult of an argument. But there's a lot of uncertainty going on right now in the marketplace. And if you've got CNBC on and you're listening to what's going on, I would bet that you would not argue against me that uncertainty is not rising. Just recently, the 25% tariffs on the auto industry. I grew up in Detroit, and so I know that's going to be a massive impact on a very large $250 billion industry. That's going to impact it. The volatility that could come on April 2nd, if in fact those tariffs are put in place. And so volatility will continue into 2025. I think that's apparent. I just want to remind you of the last few years. In 2022, I know that seemed like a long time ago. It wasn't that long ago. You know, the S&P was down 18% in 2022. Well, in 2023, obviously, it rebounded and we actually had an up year. We were up 24% in 2023. In 2024, we had another phenomenal year. We had a 23% increase as it relates to the S&P 500 in 2024. What will happen in 2025? Nobody has a crystal ball, but as of right now, the S&P is down about 2.5%. I argue that uncertainty is going to continue through the rest of this year. Why? Well, we have a lot of issues going on. Obviously, I talked about the tariffs, but we still have this massive debt that the country needs to get their arms around. And in fact, this statistics here, I don't have to tell you much, but in the last 5 years, we added $11 trillion to our debt. It took us 220 years to get to $11 trillion. That's still out there. That's still going to create a lot of uncertainty in the marketplace until that gets, until we get our hands around that. If you talk about what's going on with the Feds, well, just last week, the Fed again decided to pause any changes to the interest rates. When I pulled this slide in December, you could see that the Fed had estimated 3 or 4 cuts this year. Now it's 1, 2, maybe. They're not sure. It depends on what's going on in inflation. So there's a lot of issues going on with the climate right now. And the question that we're asking you is the climate too hot to handle? Is it too hot to handle? I think you need to ask yourself that. Why? Because when you measure the climate, we've actually measured the climate. We obviously believe it's a very difficult, uncertain environment. And so if you were to create a temperature gauge as to where you thought the climate was, whether it's too hot or if it was not hot, we've created this scale about, is it an unstable economy? And that's the economy is really hot right now, unstable, or it is a stable economy. And what we would argue is during a stable economy, it's best for likely you to manage your own portfolio, maybe trade with the momentum of the market, stay correlated to the market during times of a stable economy. That's what any wealth advisor would have you do. But during an unstable economy, which I would argue, that I've tried to make the point that we are in that time, during an unstable economy, you're going to want to find operators who are professionals, who have experience, who have weathered storms like this before, who have access to non-correlated assets, right? That's where you want to put your portfolio during times of an unstable economy. And so what I'm going to talk to you about is the golden opportunity. During the golden age, we've heard the golden age. During the golden age, we have a golden opportunity here at Bequest, and it does not require any active management, no stock market risk here, no leverage, no complex strategies, no illiquid positions. It used to be only for the ultra wealthy. It is a $30 trillion market that we're talking about here. True diversification, reduced market correlation. It is the power of real estate and energy. That is what we're going to talk about today, and how Bequest manages assets that combine these two strengths together. Let's first talk about the real estate side. I didn't mention this at the beginning, but third generation real estate investor. In fact, I remember when I was little, my grandfather would pay me my allowance. It would actually come from my grandfather, and I have to go work on his properties. He had multifamily properties. He had single family residences, and I would go work on those properties, and that's how I would get my my allowance. So real estate investing has been in my blood since I was a little kid. And in fact, when I got one of my very first commission checks when I went to work in corporate America and the technology space, I took that commission check and I went and bought a duplex. And so at 21 was my first real estate investment. I traveled around the country a lot, and I kept building a portfolio of Section 8 properties. That was my passion. Real estate was my passion. Obviously, it was early, ingrained with me early on, and so I ended up building a portfolio of Section 8 properties. I would fly home from my meetings, and I would have to go and clean up after people. If you have rental properties, the glorious life of a landlord. But I lived that for years. For 15 years, I had a very large portfolio of Section 8 properties. Yes, I was a slumlord, very proud slumlord. But along my investment journey, I realized that, because I would finance some of my properties, I realized that there'd be certain months that I didn't get paid, but the bank always seemed to get paid, right? I always made sure the bank got paid, even if I didn't get paid rent on that property. What I also realized is when the roof needed repair, when the pipe broke in Florida, when the air condition broke for the third time that summer, the bank never got a call either. Murphy never seemed to show up on the bank. And so I always thought to myself, I'm like, wow, how do I upgrade my position here? Like, it would be amazing to be the bank. Well, in 2017, I found a book on the internet called Note Investing Made Easier. And I reached out to the author and I said, this is exactly what I'm looking for. It wasn't long after that author taught me the business of how to buy mortgages off the secondary market. In fact, I was that author's very first protege. He taught me how to buy mortgages off the secondary market. And I sold my entire portfolio of Section 8 properties, and I began to buy mortgages off the secondary market. The author of that book is now my business partner, Martin Sines. It wasn't long after he taught me the business that we went into business together and launched Bequest. And so real estate investing from a Bequest perspective is really buying mortgages and holding those performing mortgages for cash flow. We've been doing this for years. It is one of the cornerstones of the company here at Bequest. We are one of the largest buyers of what's called reperforming mortgages in the secondary market. And that's how we generate cash flow for our investors. Now, let me talk a little bit about the energy side of the business. I mentioned to you that I came from corporate America, 15 years, investment strategy, technology investment strategy. I used to build data centers for some of the largest Fortune 100 companies. And we would go out and we would buy the land. We would worry about things like, is it in an earthquake zone? Is it in a flight path? Like where is this asset? We would make sure it was large enough for all the data, the systems that we needed. We would make tremendous investment to make sure that the site was fully redundant, had multiple sources of power. But what we never did was worry about the cost of power. That never crossed our mind. The cost of power was never an issue back then. You didn't worry about that. But in today's world, I don't know if you know this, but a lot of the big technology companies are investing in data centers, and they're trying to build nuclear reactors right next to their data centers so they can have cheap power. Well, here at Bequest, we found a way. We have an energy park down in South Texas. We've gone out and we've procured the power. We've obtained the real estate, and we sell that energy that we get off the grid to tenants inside of our energy park. And those tenants today, they process both AI and blockchain workloads. And so we build out the facility, they bring their computers in, and we sell them electricity. And in fact, we generate electricity at about 4.5 cents per kilowatt hour, and we're able to sell that power for 7.9 cents. And so it's a real estate play, it's an energy play, it produces cash flow for our investors. Every month, the tenants have to pay their energy bill. That cash flow that we produce inside the fund pays distributions to our investors. And so that's an example of how we generate predictable cash flow from our energy investments. A little bit about Bequest here. We've been around for 5 years. In fact, just a week ago, we had our 5th anniversary of the company. We've been able to create consistent, predictable returns for our investors for the past 5 years. Some of those investors, a lot of those investors are still with us from the very beginning. We focus on resilience. Our asset classes that we focus on have what's called asymmetrical return profiles to them. We know how to limit the downside risk on investments while still maintaining upside potential. A good example of this is in our mortgage portfolio business. See, we generate cash flow when borrowers make their mortgage payment. That's how we generate cash flow. So what happens when a borrower stops paying? When a borrower stops paying, we actually work with them to try and get them back on their feet. We'll maybe modify the terms of the loan to keep them in their home. But if all else fails, we will exit out through the property. And so on average, we have about 35% equity cushion above our positions in these mortgages. And so let's say it's a $200,000 property. We have no more than $130,000 of our capital invested in that. And so when a borrower stops paying, on average, that $200,000 property will likely be sold at the foreclosure sale for about 80% of its value. right? So that will sell for about $160,000. We have no more than $130,000 invested in that asset. And so in a bad situation, the borrower stopped paying, we exit through the property, we still create a $30,000 capital gain for the fund. And that's an example of what's asymmetrical returns, meaning our downside risk is limited because behind the borrower we have an asset that stands. We also focus here on growth at Bequest, and in fact, the returns that we've generated for our investors have outpaced any fixed income competition since we launched the fund in 2020. If you look at a fixed income dividend strategy, ETFs, even the S&P 500 itself, we compete with for the last 5 years. And of course, another promise we have is transparency. You know, all of our financials are audited. We have a registered independent public accounting firm. We have fund administrators, full transparency here at Bequest. That's one of our brand promises. A little bit about our funds. I talked to you about energy and real estate. On our left of the screen here is our legacy fund. That is the fund that we have. These are all fixed income funds. That's the fund that has both energy, mortgage notes, and a third pillar, which is commercial real estate. Those three pillars exist inside legacy. The middle fund is our income fund. The income fund is our original fund that was launched in March of 2020. It only holds performing mortgages. And then you have our latest fund that was just recently approved by the SEC. It's a product that we have for all investors. You may say, well, I'm not accredited. Can I invest in these funds? You can absolutely invest in the legacy fund on the right for non-accredited. It was a product that's approved by the SEC. And so whether you're accredited or non-accredited, we have a product for you. And in fact, for Camaplan subscribers, account holders, we actually have a promotion just for you. And so today, we typically pay out a 10 or 11% return in the legacy fund. And those amounts vary depending on the amount of money that you invest in the fund. For a limited time, right now, we're offering an extra point for any investors who come in from the Camaplan. You can use this Camaplan promotion, and a 10 or 11% return turns into 11 or a 12% return. We also have an option on the income fund of adding an extra point. You may come in at 8 or 9 typically into that fund. We have a 9 or a 10% option just for you. And for our non-accredited option, we normally have a 2-year commit for non-accredited investors into that legacy fund. We're waiving the 2 years and only requiring a 1-year commit. We're still paying on an 8% return. Those are the different funds that we have available to our investors. And just for the subscribers of Camaplan. I want to show you a brief analysis on if you took some of your retirement account and you invested it or used direct funds into the account. Everybody asks us, how long will it take me to get to $1 million, right? How long does it take to get to $1 million? And so if you took $50,000 and you invested it in our legacy fund that generates a 10% return, and you contributed $2,000 a month to that investment over the next 15 years, you'll take that $50,000 and turn it into $1 million. We also have an example here for non-accredited. Let's say you want to start with $5,000 into our fund. And so we have a 7% option into that fund. We also have an 8% option. So if you came in $5,000 into our non-accredited fund and you contributed another $2,000 a month, over the next 20 years, you'll take that $50,000 and that $50,000 will turn into $1 million in 20 years. You will have contributed 485,000 to that investment. We will have contributed 577,000 of interest. You can compound it. You don't have to take the distribution every month. You can actually reinvest the distribution. If you reinvested it over 20 years with just a $5,000 investment, you will have $1 million in your account. So Bequest has been around for 5 years, that I mentioned. 89 million in AUM over the last 5 years. Well over 165 investors. Most of those investors have been with us from the very beginning. We've been able to consistently deliver 62 payments to our investors month after month after month. Really proud of our distribution consistency that we've been able to provide to our investors. There's 2 ways to invest here at Bequest. As I mentioned, you're not limited as to your status. And by the way, it's the status that the federal government has, accredited, non-accredited. That doesn't matter here at Bequest. That might matter at a lot of other funds, but here at Bequest, it doesn't matter. We have a solution for you. There is 2 ways to invest. Doesn't matter if you're accredited or non-accredited, there's still 2 ways for you to invest. The first way is directly into the fund. It's a very simple process. We'll send out documents to you, review those documents, you'll sign those documents, you will invest in whatever type of entity you want to use to invest. Depending on the type of fund you're investing, you may have to approve accreditation status. If you're non-accredited, there's a certain fund for you. You can invest directly into the fund. A very simple way for you to invest. You sign those documents, wire the funds, you become an investor with Bequest. The second way to invest is actually one of our most popular ways of investing, and that's really why we partner with self-directed IRA companies like Camaplan. And so you can use your self-directed IRA funds to invest in any of the Bequest products that we have here. And I'm going to let Will talk a little bit about how easy it is with Camaplan to invest with Bequest.
Yeah, absolutely. Showing my pleasure. So the great thing about investing with a self-directed IRA is it doesn't look too much different than when you're using a personal funds to make an investment. The only difference is there's a third party, that's us, involved, because the IRS requires that you have a neutral third party, keep record of the transactions and report to the IRS at the end of every year. So at a very high level, the way the process would work is you would first identify the retirement account that you'd like to use to make this alternative investment, whether it be an old employer plan, a current IRA, anything like that. And then you would want to open up a similar account to receive those funds at Camaplan. So whether it's a traditional IRA, a Roth IRA, HSA, ESA, solo 401k, we offer them all. And before I go any further, and this might sound like a lot of information, I'll try to keep it brief, but the most important thing you can take from this entire explanation is my contact information. Feel free to reach out to our office. We're always happy to walk you through the process and go into specifics with your exact background. So once you've identified the account that you want to open at Camaplan, you then fund it either via transfer or rollover. We'd hold your hand through the process, and then at that point, you'd get your investment paperwork from Bequest. And when you fill that out, it's not you as the subscriber, the investor on those documents. It's your IRA, which is a separate entity from yourself, similar to a trust. So you'd fill out your IRA as the investor, send that into us with our asset purchase directive. It just tells us what you're investing in, how much you're investing, and how you'd like it sent. And then with that, we'll process that within 2 business days of receiving that paperwork in good order. Sign on behalf of your IRA as third-party administrator, and then release those funds based off your instructions into that investment. And then you can see the return from that investment go back into your IRA, and then you're free to use that cash to reinvest or put into your other retirement accounts. But again, if you have any questions about the process, feel free to reach out to me. I'm always happy to help.
Well, thank you, Will. We've been on this mission of educating people about how to use their IRA accounts in the alt space for years and years and years, and it's hard to believe the message still isn't out there. And I know the good folks at Camaplan will. They're just continuing to educate people on the power of their IRA accounts. And in fact, what's interesting to me is obviously a Bequest is considered an alternative investment. It wasn't long ago that most folks who called themselves a professional portfolio manager only invested about 5% of their portfolio into alts. If you look at what the family offices are doing, very large institutions, 45% of their portfolio is being moved into the alt space. And what's interesting to me is over the next 5 years, $2 trillion will leave the equity markets and will move into the alt space. And so there's a lot going on, and the power of using your self-directed IRA account into the alt space is a very powerful thing. And so I appreciate Will taking you through the process. I want to close with back to where I started. And that's, again, I want you to think about this question. Hopefully you answered it. And so for me, I've answered this question. I know a lot of our investors have answered this question. They're trying to build a portfolio, and you don't just use Bequest to build a true passive income portfolio. You use other fixed income opportunities. But what we're trying to get you to think about is, if I had a portfolio that generated for me $200,000 a year annually on a consistent basis, then I would have true financial freedom in my life. What is it for you? I think you've answered it. We have a solution to help you with that, to generate that passive income, for you generate that fixed income strategy for your portfolio. You might not need it now. You may say, I'm gonna generate fixed income into an IRA, a self-directed IRA. Well, you don't have to. You can reinvest those. But the moment you retire and you need that income, you just turn it on, right? You move from reinvesting to distribution. But now is the time to think about this strategy. We want you to take massive action. Hopefully the products at Bequest relate to your why you're managing this portfolio, what you're looking for. We want to give you a gift. But before we do that, we have a team of individuals who would love to meet with you, right? We have a phenomenal team here at Bequest. Sean Osborne, Lena Sells, and Rebecca Samples. Any one of them would love to meet with you to talk in more depth about our products, what we offer, how we're able to help investors create consistent, predictable returns with their portfolio. But before we do that, we want to give you a gift. We're big on education. And in fact, we have a QR code right here. If you can grab your phones, click on that QR code, quickly fill out this survey. We will send you a $385 gift worth of resources that are real. These are real resources. We will actually ship them to you. It's not all virtual stuff. The book that I mentioned, my business partner, Rody, actually wrote a few books. We're going to send some of those books to you. We have what's called the Legacy Planner, which helps you build an investment philosophy for yourself, investment strategy. That's a really great tool. We have the Living Financial Statement, which is just a powerful tool for you to use that helps you keep track of the passive income you have coming into your life and your expenses, and to be laser focused on creating passive income as you build your portfolio. All of these tools we want to give to you as a gift. So grab that QR code, fill out the information. If you just want to go on our website, it's bqfunds.com/free. You can go there, you can grab your resources. We will send those to you as our gift. And with that, Will, I'm going to hand it back to you.
Perfect. Thanks so much. A lot of great information today. I'd like to open it up for questions now. We do have about 4 questions already, so I really appreciate it. Keep them coming. If you have a question, I always like to say this: if you have a question now, it's probably not just you that has the question. Either somebody else in the audience has the question, or people watching this recording down the line may have the same question that they're not able to ask live. So you're doing somebody a service with the questions that you ask while we have Sean's time today. So I'll kick things off with the first question. DJ asks, "What are your fees within the fund?"
Yeah, what are the fees? Great question. So here at Bequest, we are a fixed income, right? And so we will deliver the yield that you signed up for in that particular class. And so it's whatever it's 7, 8, 9, 10, 11, 12, whatever that is. And so as operators of that fund, we make money when the fund produces a yield above that. And so there's no 2 and 20 fee strategy here. We generate income from whatever we make above and beyond the investment strategy. And so we're happy to show you what we've actually returned on our capital over the last 5 years. We actually show that to our investors. We do live off of the margin, depending on what we pay to our investors and what we earn in the marketplace. So that's how we get paid here at Bequest.
Great question. Thank you for the answer. Another question comes in. How quickly are your K1 how quickly are your K1s issued, or do you issue 1099s?
Yeah. So with our accredited products, those are K1s that are issued. We are on time every year. We have a great finance team that works really, really hard to get the K1s out. And so typically those K1s are released between March 15th and March 30th. I know a lot of investors sometimes get hung up with operators who will drag out their own personal return because they've decided to delay filing a tax return. We've been consistent for 5 years. We've been delivering our K1s on time for our investors so they can actually file on time on April 15th. And so we're really proud of our finance team and what we're able to provide for our investors on a consistent basis. The last question was 1099s. So we do have a bond product for our non-accredited investors. It's a Bequest bond that invests in the same asset classes that we mentioned. That bond does issue 1099s to investors.
Perfect. Thank you. Thank you for the question as well. We have another question that comes in. What are the minimum investments, and in what amounts can we add to our initial investment?
Yeah. So different funds have different minimums. I would say on the accreditation side, if you're accredited, those funds have a $50,000 minimum. On the non-accredited side, the minimum goes all the way down to like $1,000. So you can start small with us. But on the accredited side is typically 50,000 minimum, and there is no maximum there.
Great. Thank you for that. Another question comes in. How do we know if we are accredited?
Yeah, so we have a phenomenal team who can kind of help you with that accreditation status. There's some rules around it that I won't get into right now, but I would encourage you to just set up an appointment with our team. They'll take you through, help you answer those questions. If you don't have an accreditation status, we'll actually help you go obtain one. It's very simple process. We have some tools that we use. If you believe you are accredited, you do need to go through a very simple process to get a letter. If we can help you get that accreditation letter, we'll walk you through it. But our team is available just to meet with you and just kind of talk through the steps of that.
Perfect. Thank you. Is this an evergreen fund?
It is. It is. All of our funds that we operate are evergreen funds, which means you can come and go. You can come into the fund. You can add later into the funds. They're not closed-end funds. We're not syndicating anything here. We are managing portfolios of cash flowing, producing assets that you can come in at any time.
Great information. Thank you. Great question. Another question comes in. On the K1, does the K1 show a return of principal, interest, or capital gains?
Yeah, so it depends on what occurred that year. In the mortgage fund, we could have a combination of both, all three. When we do have capital gains that come in, as I mentioned, an example of when a loan paid off and after we took it to foreclosure, that would create a capital gains scenario. Um, but most of the time, it's interest income that's being produced. It's capital gain. We're also returning capital to our investors, and so it's a combination of all three in any given year.
Great question. Thank you for that. Next question that came in, is 11 to 12% average? What is the highest and lowest interest rate on the legacy funds?
So the legacy fund has the highest yielding percentage is a 12%. We have a promotion that we just mentioned there, 12% yield that requires a $500,000 investment into the fund. The lowest producing yield in legacy is typically a 10, and that's a 2-year commitment in legacy.
All right. That's all of the questions we have at the moment. Um, so I think unless you have something else you want to add to the end of this, I think we can start wrapping up. Sean, do you have anything that you'd like to wrap up with?
No, Will, I just want to thank you and Joe for allowing Bequest the opportunity to come onto your stage and just talk with your people about our investment strategies, our investment opportunities. We are just looking forward to chatting with anybody who is interested. We will send out some information that allows you to kind of easily connect with us and have a discussion with us if you so desire. And we look forward to an opportunity to come back on this stage again and appreciate it, Will, and thank you for hosting us today.
Absolutely. I'm sure I can speak on behalf of everybody here that we thank you for the great information you were able to present us and allowing us your time. I'd also like to thank everybody who attended this live, as well as anybody who's also watching the recording after the fact for getting the information. If you have any questions about how any of this applies to your self-directed IRA, or if you'd like me to go through any specific scenarios with you over the phone, I'd love to speak with you all. Don't hesitate to give us a call at our office anytime. And I one more thanks to Sean and Bequest, and I hope you and everybody else have a great rest of your day.
Thank you, Will.